I did my first like net worth and budget calculations. I'm like, what if I sell everything and go into this passive income stuff? And I realized that by doing that, I could quit my oil field job, which was a job I really despised. I never saw myself there long term. It was just not a good fit for me. I think, well, the story could be said a lot of different ways, but I think it starts from my upbringing and childhood. So my parents were always about this value add stuff. They were not investors in value add multifamily or anything, but it was all about let's buy a used car that's got some issues and let's fix it and make it worth more and try to maintain our value in it, or buy used clothing and resell it for the same price you paid, that kind of stuff. So I was always fascinated with money, but more from a budget perspective. And still, I started thinking as I got older about, let's just say I was the best budgeter ever and I made $10,000 a month in W-2 income, which would have been, a great achievement for me as a child, to strive for. Well, you still got to pay for housing and food and expenses and lifestyle and travel and insurance, all these things. And so even if I clipped coupons my whole life and I saved as much as I could, I mean, my highest and best might be 3,000 or 4,000 per month that I could put away. And if you're just sticking that in the bank and you're just waiting until retirement, you're going to get eaten up by inflation. It's just quite frankly never going to be enough. And you're going to have to make a ton of sacrifices your whole life. So I got turned on, like so many people, with the Rich Dad Poor Dad books and that kind of stuff, into real estate and taxes. And it was just a whole new world for me to explore. And so the first thing I did, Michael and Garrett, was house hacking. So I bought a 2-bed, 1-bath, and it was in a college town. It was 2 miles from Colorado State University. And I had just come out of college. And so I knew there was a demand for a furnished place that was a rental. And so my mortgage was like $640 a month, and I was getting $600 a month in cash flow that I didn't have to work for. So that was like the wheels turning right there. I thought, how do I turn this 600 and times that by 50 or 100? How do I do this over and over without having 100 roommates? And so that led to fix and flips, buy and holds, vacation rentals. I did all kinds of stuff in single family until I burned out. And I think that's the story for so many people. You don't realize how active that really gets until you're 7 properties deep, and all of a sudden it's like you're running around. I had a W-2 job, I was working 100 hours a week, and then I'm having to manage all this on the side. And man, I had zero time for family, for friends, for dating, for travel. I had no time in my life. So for me, it was all about what I call time freedom and the ability to do more with my time. And so I ended up selling, I'm just shortening the story for you guys, ended up selling all my single family homes, including the house I lived in. And I ended up going into real estate private placements, which I found out about through a couple mentors in a local real estate meetup group in Boulder, Colorado. And I just did one at a time, minimum investments here and there, started diversifying, and realized that's a real thing that people can do. To your point, I always just thought about stock market or single family home. It's real estate or it's stocks. And that's where the world ends right there. So I've learned a lot over the years, but for me, it was about freeing up time and having a life and not just living to work.
Yeah. And you then made a transition to working with Ashcroft Capital, and you're actually managing investors. And I think your background is awesome because it puts you in their shoes. So when you're talking to a prospective investor,
yeah,
you kind of know what they're thinking, what they want,
yeah,
what they're maybe concerned about. And tell us a little bit of background on how that came about to your current role today.
Yeah. Well, the first thing I did when I started getting serious about real estate and cash flow, and I got the bug, so to speak, is I did my first like net worth and budget calculations. And I'm like, what if I sell everything and go into this passive income stuff? And I realized that by doing that, I could quit my oil field job, which was a job I really despised. I never saw myself there long term. It was just not a good fit for me. And the first thing I did, ironically, I went to go work for a huge brokerage house, got a Series 7, 63. I wanted to do stocks, bonds, and mutual funds to start learning about that too. So I wasn't just a one-trick pony. Then I realized real estate's really where my passion lies. That's really what I want to go with. Worked for a small syndication startup group for a few years, helping them with investor relations because that's what they needed. And because they were a startup, they just needed somebody. So it just kind of like fell into my lap that way. And then I had been investing with Joe Fairless and Ashcroft for a number of years. I was an LP in a lot of their deals. And Joe had his firstborn daughter, Quinn, and I knew he didn't want to be out on the road and doing all these travel events and conferences. So I said, look, this is my passion and I love educating people on this stuff. It's what I do full time. Let me take that off your plate and call me whatever you want to call me, but I'll just get out there and I'll do podcasts, webinars, meetups, whatever you need. And that's kind of how it came to be with Joe years later.
Yeah, it's funny. I think I got together at Dealmaker Live a couple of years ago, and he was like talking. I was like, Joe, you're still talking to all the investors? He goes, yeah, it's really important. I was like, well, I'm sure it is, but it's not really the best use of your time, And so I'm glad he brought you on because, you now can focus on this. So let's talk about some of the best practices, right? People,
Sure.
What are some keys or how you take care of your investors? What do you think is the most important when you interact and deal with potential investors, or even existing investors?
Sure. Well, I think you hit the nail on the head earlier when you said, I try to come from the perspective that I am an LP investor myself, not only with Ashcroft, but other groups too. So I can kind of come from that angle. This is what I see, and this is how I think it stacks up and my thoughts on it. Again, never, recommending or endorsing, but just having that small time chat, I think is really useful. Also, a thing I've learned over the years from the brokerage house to, the startup to here is not to be a product pusher. You don't have to be a salesperson. And in fact, I'm not, and I never will be. You try to be solution oriented. I try to ask people about what they're trying to achieve, why they're trying to achieve it. And I start tuning the conversation towards that direction, right? I'm trying to find a solution, if possible, to help solve the problems that they have or to help them achieve what they're trying to achieve. I think that's really key for people, and not just to say, hey, I'm Travis Ashcroft, here's our fund, it's monthly distributions, here's the returns, do you want to put 100K here? That's just not a good approach. It doesn't usually result in a high ROI.
So talk about some of the problems that potential investors have. It's interesting that you mentioned that, and some probably because they listen to Joe's podcast or already have syndications in their brain, and some know it more than others, but fundamentally, what are they trying to do? What are they trying to solve when they talk to you?
Yeah, well, a lot of people are trying to obviously build wealth, but very select few are really focused on cash flow and passive income. So I've kind of made that my little niche to teach people about the power of monthly cash flow. And especially if you're able to turn that over, year after year. A lot of our investors are they're quite frankly, just focus on their highest and best. They're a doctor, they're a dentist, they're a attorney, they're a pro athlete, whatever they do. They don't want to flip the houses. They don't want to take their eye off the ball and sacrifice their weekends and all this kind of stuff. So I would say the biggest pain point for most people I speak to is just not wanting to be so active in addition to what they're already doing. And I would also say, because we work with high net worth and high income people, taxes is a huge one. So how do you reduce taxes or just quit adding to your bracket, and bring that down? So that's a huge one that I run into as well. I mean, gosh, there's so many. I mean, you hear send my kids to college, you hear early retirement, you hear, I could go on and on. There's a lot, but whatever it is, I always start the conversation with the investor to let them kind of vent out what it is they're trying to do. And then again, I try to, if possible, fine tune the messaging towards that and not just say, oh, thanks for sharing. Well, here's our fund, I'll send you a brochure.
Yeah. And so it's interesting. I would sometimes gauge our investor sentiment, like right now, for example. And it kind of ebbs and flows. For example, COVID wigged people out. How do you see investors react to certain things? Like, just take it now, for example, right? Like now versus maybe 6 months ago or maybe even 2 years ago. What is on investors' minds right now?
It's funny how all asset classes really tie in together when things go in cycles or have their ups and downs. I think our human psychology is all really the same, So right now reminds me so much of the summer of 2020 when the pandemic onset. You see everyone's personality type start coming out a lot more. And you've got a lot of people, hey, I'm on the sidelines, I'm going to wait and see. You've got some people like under the impression that, hey, as interest rates go up, that means that they're repricing and discounts on the multifamily. So I'm going to keep investing and I'm going to kind of dollar cost average through the downturn. And you've got everyone in between, but there is a lot of money, I think, still sitting on the sidelines. And so as markets recover, like we saw in 2021, and everyone's just buying everything and everything's just going through the roof, then it's kind of the opposite. Everyone's just throwing money everywhere, and maybe not doing as much due diligence as they should. So that's what I see. And what I subscribe to is kind of what Seneca said, 2000 years ago, Roman Stoic. He said, we suffer more in imagination than in reality. And I think a lot of people are always think worst case scenario. Oh my God, we're going in recession. It's going to be 2008 all over again. I remember what happened. I lost my home. I lost my job. My 401k got cut in half. It's happening again. We're due for it, but it doesn't always pan out that way. And if you're educated in these types of asset classes that we both invest in, there's a lot of bullish case to be made for them, I believe, especially in times of recession. So something to keep in mind.